So the IT services space is essentially been in focus for all the right reasons. The big number from Accenture recently is excited people, given them confidence that maybe things are going to be good for the Indian IT services pack going forward as well. Third quarter numbers are not very far away. We start getting them early January. Well, let's talk about a sort of mid-cap IT company. Zensar Technologies is the company on our radar. Edelweiss recently wrote a note on the company. They think that Zensar is on the cusp of a turnaround. They estimate an earnings CAGR of 29.5%. They're valuing the company at 25 times Q4 FY23 numbers. To discuss the outlook, we are now joined by Ajay S. Bhutoria, Chief Executive Officer and Managing Director at the company, that is Zensar Tech. Mr. Bhutoria, great to have you with us here. Thank you very much. Prashant this side.
Good morning, Prashant.
So Edelweiss is projecting a 50% plus upside to the stock price, that is Zensar Tech. And they're saying that you're on the cusp of a turnaround. Second quarter numbers from you have been pretty good. You've outlined 5 points of focus for the company from here. Could you tell us how this will translate into, revenue growth and margin profile from here out?
Sure, Prashant. So Prashant, I came on board in January of this year, and we started working on multiple tracks. The first track was strategy refresh. And in April, we launched our new strategy, which revolves around 5 strategic focus areas, 21 playbooks, and supported by 4 pillars of execution: sales transformation, talent transformation, partnerships, and M&A. And the result of this is that we came out with a crystallized set of services, strong value proposition, and this significant go-to-market thrust is beginning to bear fruit. We had indicated at that time that it's going to take 4 to 8 quarters to take root and flower. We are strongly in the execution phase. The second track was that we have worked significantly to strengthen the team, be it sales, be it client relationships and engagement, delivery. And we've continued to also make strong investments in bringing in subject matter expertise within the firm, be it business or technical. And we've been building a formidable team. The third track for us is M&A. We did a successful acquisition earlier in the year. We acquired M3BI, a digital engineering and a data engineering firm. And this has gotten us additional capabilities, skills, and market access. It's been a very good acquisition. And we continue to actively look for other acquisition opportunities. The fourth track was brand refresh. So this was the first brand refresh that we did in the last 20 years. It's a direct offshoot of our strategy and is driven by what we call as the Think Velocity brand platform. And it's resonated really well with the stakeholders, be it our clients, be it our associates, or be it market in general. Now, the result of all this is that we have seen green shoots and early signs of success. We've had just like you mentioned, we've had a couple of strong quarters consecutively. The first quarter of this financial year, at 5.8% sequentially, quarter on quarter, was the best quarter that we've had in the last 6 years. And the subsequent quarter was even better, at 6.3% organic, 12.3% overall. It was even better than the previous quarter. So overall, we feel very confident of the strategic direction of the firms, as well as how we are executing on this strategy.
Okay. Ajay, good morning. So, let's talk some numbers, because this Edelweiss report also talks about, that there could be an earnings CAGR or compounded annual growth rate of almost 30% from FY21 to FY24. They're saying 16% would be the dollar revenue growth, and rest, of course, the operating leverage. Are these numbers reasonable?
So Anuj, when I came on board in January, we were clear in making a statement that our objective is to drive predictable, sustainable, and profitable growth, right? And we've structured our strategy, we've refreshed our strategy to drive that conversation, right? So that is something that we are well on route to execute, and we feel confident about how we are executing through that, and how we are strengthening our go-to-market, strengthening our teams, And we feel overall very positive about the firm.
Okay, overall very positive. Sir, I particularly want to know what the plan is as far as the digital transformation is concerned, because I was looking at the revenue contribution from your digital business and that has gone up quite a bit. As on Q2, 71% comes from digital compared to about 50-55% 6-7 quarters ago. What all are you doing to take your digital initiative forward?
Sure. So, Sonia, there's a bunch of different things. So the first track is around experience services. Is the work that we do around product and experience, research, strategy, and design. Is driven largely through an overarching umbrella that we call Zensar Studios, through a couple of boutique entities that are in the Zensar fold, Foolproof in the UK and Indigo Slate in the US. And this proposition is working very well. Even stronger is the arc that we have drawn from experience to engineering. And that's something that we have further strengthened in the course of the year through two service lines. One is advanced engineering that also drives our cloud native engineering and our data engineering analytics AI ML practice. Furthermore, the acquisition of M3BI has further strengthened this capability and the narrative. And the results are here to see, we continuously are chipping away at.
Okay, I think we've lost Ajay there. We'll try to get him back. Ajay Bhutoria took over in January 2021. Zensar has been one of the top picks of Edelweiss. Now, remember Edelweiss, Sandeep has got it bang on in terms of many other stocks previously. He was, I think, the first with all the, the first to say that, IT companies should be trading in the 30s. So let's see. We'll try to get that connection back because there's some important issues that we need to ask. I think we got the connection back with Ajay. Ajay, the other important issue is attrition, right? Because I mean, it's not just with you; it's for the entire sector. When you have so much growth, obviously people will look for opportunities. But is it coming under control? You have given 2 wage hikes in 2021, but last quarter's number was a bit worrying at 23% or thereabout.
So look, the environment, as you know, right? I would just reiterate something that I think is well recognized in the industry. The environment is extremely demand rich and very supply constrained. And this has resulted in extreme supply chain inelasticity. The result is that there is an industry-wide attrition issue. It is global, but in the Indian context, it's amplified. And in Zensar, we've had our own share of attrition issues, right? So we are addressing them at 2 levels. This whole issue of attrition, retention, we are addressing at 2 levels. The first level is a massive effort that we are making towards retention. The first step towards that, as you mentioned, is unprecedented comp increases. The second thing is, accelerated career progression, of course, based on skill and performance. And then we are working on multiple ways for deeper engagement, especially in this challenging world where we are working from home, remote working, etc. How do we increase and how do we ensure that the level of engagement remains deep so that we keep stickiness with our employees? So that is first level. The second level is a huge effort to plug this demand supply gap. And this is through, number one, a huge initiative to crank up our organic talent supply engine. And this is the single biggest lever that we are applying to make a root cause fix of this problem. The second is a very enhanced set of activities around how we are expanding our lateral hiring engine. So we are driving growth, and this growth necessitates us to hire people. So we are hiring people not just to manage attrition, but also to drive growth. So we have significantly enhanced our lateral hiring engine. And the third lever in this track is we're expanding our delivery locations, both in India and overseas in nearshore geographies.
Just one last quick question. Apex Partners, Mr. Bhutoria, had completely exited with the 11.5% block last month. Could you tell us what was the reason for this exit?
So, Apex has been with Zensar since 2015, very valuable partner. And, their participation in Zensar and their exit from Zensar is purely an investment decision. What is very encouraging is that with this exit, we have onboarded 10 really good investors. The liquidity in the stock has gone up, and overall, we feel very positive in terms of what has happened in the course of the last quarter or so.
We'll leave it there today. Thanks a lot for joining us. As I said, the compensation hike is really the issue here, but then the IT companies are making good money as well, so it's working both ways. Let's do one thing. Let's now take the 9-10